Thanks so much for joining us. I am Jenna Pilgrim. As he said, I'm Jenna Pilgrim from CoinFund, and I'm here to moderate our broken token economics panel. So I am joined by my esteemed panelists, Rob, Alpen, and Max. So maybe it would be helpful for the audience if we just do a quick set of intros about who you are, what you do, and sort of what part of the TGE process or experience set you bring to this panel. Rob, you want to go first?
I guess I'll go, yeah. Hey guys, I'm Rob Viglione. I'm the CEO of Horizon Labs. We're actually a protocol developer. And so that puts us on the whole generating tokens side of this. So I'll talk from that perspective. Two things we do now is a privacy layer on top of Base, which is called Horizon, kind of repurposing an OG token that we launched back in 2017. So we'll include that in the conversation. That's called Zen, and it's soon to be relaunched on Base. Super excited. And something called ZK Verify, which is a modular blockchain for ZK. So as a protocol dev shop, we specialize in cryptographic engineering.
Hi, everybody. I'm Alpen. I'm a partner at Borderless Capital. Thank you, Jenna, and great to meet you guys. So I think this is an important topic. I think it kind of gets revisited every couple of years, and I think that there's a lot to talk about as to what's wrong with the way that people think about tokens. Just for background, Borderless is a Web3 asset manager, and we've invested in probably over 100 different token-related projects. So tokenomics, understanding what the design and the concept around the token, the utility, how it will be issued, what it will be used for is extremely important in investment decisions. We get quite involved in working with our teams on that. And so happy to talk about that as we have the rest of the conversation.
Yeah, Max Williams. I'm a co-founder of Rooted Digital Assets. We're a digital asset investment firm. We're mostly focused on liquid tokens, so we don't do venture, really don't do many privates, do a little bit of equities, but mostly focused on liquid tokens.
Awesome. So Rob, I'll actually start with you because I know you talked a little bit about your background in launching tokens, and I know you've worked on many over the years. So obviously we've seen the token landscape change a significant amount. We've all kind of been at this for quite some time now, and the playbook really changes every 6 months or so. So what how are you seeing that? How are you seeing that change play out this cycle comparatively to previous cycles?
So I got into the token launch business before it was really a token launch business. It was like those good old days where you'd fork a GitHub repo and just have miners start mining whatever you had. So, and that was the purest of the pure type of fair launch things. And this was because we were purists from the Satoshi days, purists where we just didn't think that it was right to get VCs involved, right? For whatever reason, like we're too young and naive to understand that you actually need capital to operate a protocol and project. So that was the early days, and this was I know like some VCs were in the industry back then, but a lot of the protocols were literally just like fork some repo or create something new and launch and just let people start mining it or figure out a way to get the token in a completely fair, decentralized way. And that was in my naive worldview, that was kind of just the starting point. Now I've done multiple things since. Probably the biggest from like an FTV notable perspective would be my company partnered with Yuga Labs, the founders of the Bored Ape Yacht Club, and Animoca, and we helped launch ApeCoin. And this was a massive launch, and it was one that VCs were heavily involved in, A16Z being, I'm pretty sure, hands down the largest VC involved there. But that was still kind of a weird hybrid because it was a very community-driven project from the BAYC days, and they just had this really diehard community. So that was an interesting one to see all the way to now as we're getting ready to TGE and launch ZK Verify with a new token. Like some of the conversations I know, like multiple years into a bear market, so it's kind of some pickings, but some of the VC conversations I had were, okay, well, we want one year lockup, and then we want to be able to dump that. And they would never say we want to dump everything, but why do you want it 1 year lockup, guys? Right? Do I really want you as a partner on this project? Are you really here for the long term as a partner, or are you just looking to recoup your money? So just to say, I know it's kind of long-winded, so you got the kind of cross-section there, but like we're looking for partners like on the protocol level. Like we want people there for a little bit longer than a year or two. And being a VC used to mean much longer timelines where you were actually a partner and you took equity in a company. So my company took our first bet from probably the best VC that we've ever worked with, DCG. And like they basically said, like, okay, well, we don't want money back for 30 years. I mean, like, build cool stuff, like make the world a better place. And that's maybe, spoiled from like my first VC experience being that.
Yeah, so I'll actually take that and toss it to Alpen. Alpen, when you're looking at probably in response to Rob's comments, when you're looking at new projects to invest in, how do you sort of balance this this aversion to VC coins, to how do you obviously edge for as much ownership as you can. We do the same thing. All VCs do. How do you think about tokens being released into the world and sort of the VC's role in launching tokens that hopefully will if we all do our jobs right, go up?
Yeah, thanks. I think I'd give two different kind of perspectives on the token. So one is what we believe the token is supposed to represent as one set of things. And the other point is a timing question as to when does it make sense to even have a token as a company or as a startup or as a protocol. So if you think about it from a VC investment perspective, if you're looking at a company, it may make sense to have a token early on, or it may make sense to wait to have a token if you ever issue a token, right? So if you think of the whole like universe of startups, not every single company will have a token. So like maybe this company just does not need a token, right? And there are many companies, even in our own portfolio, that have never issued a token and may never issue a token, unless obviously we have this like longer term thesis that many things will become tokenized, including shares and things like that, in which case they will have a tokenized version of the shares and we will evolve to like a different point. But coming down to the timing question, the issue is that are you using the token as a catalyst of growing adoption of your product or of your network? Or are you, and where are you in the stage of growth? So if you're doing it at the very outset, or are you doing it towards like a later point where you already have a kind of presence? So for us, I think the important question is, will the token materially, substantially be additive to your overall growth, or will it become kind of a secondary focus or priority for you to have to manage the entire set of things that have to happen for you to issue a token, have it listed, have it managed properly, have to deal with all the, the concerns of token holders, all the things that come downstream of that, including like how it's emitted over time. Does it become an inflationary token? Are you going to buy them back, etc.? So all the things that come with having a token, which are not just that, you might have like an asset that people can acquire. And I think that that's really important to evaluate company by company. I don't think there's just a general rule, but we're at a point, just if you step back, where we just have so many tokens being issued. Obviously, we have meme coins, we have like a whole sea of tokens where it's really hard for people to differentiate between them. And there's a limited amount of capital going into them. So when you have such a long tail of assets, then it raises questions as to how much can the next coin actually absorb in capital. And it has to be meaningful enough for that company to dedicate the resources, for that asset to stand out, to be properly designed. And that's where we would provide advice and say, well, we don't think this is a good time for you, not because it's quote unquote a bear market or it's a micro bear environment or whatever it is. It's more that this is going to become a distraction that may be a negative for you at this point in time, right?
Yeah, totally.
So I think, I'm just spitballing just the general points that we are seeing, right? And I think that as people are becoming more and more interested in exposure to tokens, which we are now seeing with this institutional moment in crypto where people want exposure to Bitcoin, publicly listed companies are now acquiring tokens like Solana, which we've invested in a company that does that called Pexi, to hold Solana on their balance sheets, etc. I mean, it's all the more important. It's not irrelevant. It's actually more relevant how you launch a token, when you launch a token, and how it will be seen by the broader public. And so I think, but these factors are really important. Yeah.
Yeah, definitely. Max, when you are thinking about this from like a liquid markets perspective, there's this battle going on right now between sort of fundamentals versus like short-term viability, and there's lots of messing around with locking and unlock schedules, investing, and that kind of thing. How much do fundamentals really play into the sort of short or long view of investing in tokens today? Hello.
When you say fundamentals, I guess more thinking about like the tokenomic fundamentals. Yeah, I think a lot of that comes into play. It's almost just as important as everything else. I think you see a lot of, you know, conflicts of interest, whether it's they have an equity entity and a token equity entity, and the revenue goes somewhere, and then they release a token, and the token just becomes a new way for them to raise money, and they're just printed out of air, and it doesn't actually tie back to the token itself. So it plays a huge role. I think one thing, this isn't universal, but I will say like a broad not policy, but we have started to avoid any token within the first 2 years, because anything that has a team or investor unlock at that 1 year mark, almost universally, there's just going to be a supply overhang. Now, if the fundamentals are extremely positive and the growth is like through the roof, then yes, we can get over that hump. But generally speaking, most of the time, some group of either the team or the investors themselves are going to start to weigh on that token a lot. You see a lot of behavior with upgrade launches and things right around that 1 year mark. So that's something that we really paid a lot of attention to, as well as do they actually, one way to get through that is actually have value accrual to the token. So getting into the fundamentals of the project itself, like if they charge fees or revenue that can therefore, and some of it goes back to the token holders. We don't need distributions, but hold that in a treasury wallet that the token holders, the DAO, has a role in. I think that's a structure we support, but generally speaking, you see a lot of tokens, a lot of people launch tokens and they're just trying to get to that 1 year mark where a lot of people can kind of see their exit.
Who do you find are the, like you say you're not getting in until sort of the 2 year mark or as those unlocks happen? I know unlocks is something that liquid markets monitor like hawks to try to figure out who is selling and what they're trying to do. Do you think that this is like a wider sort of push either from VCs or from large whales to be able to get liquidity out of their tokens, or who is selling? Like who is usually the counterparty? Obviously the counterparty on your side is probably a desk, but like who is the seller?
Yeah, I think it's probably a mixture. And I'm generalizing, I'm sure there's, the highest quality investors, the highest quality teams, I'm sure are holding for the long term. But I think it becomes this these token factories where the product is the token and all they spend their time thinking of is how do we sell this token? So we're going to take L2s are hot, move programming language is hot. Let's put that together. And they have a token before they have a product. I think that starts to become, that doesn't sound right. Why not have a product and see how it goes? Use the token as an incentive to grow the product rather to, seeing a lot of bad behavior be put into the sunlight today. So I think it's, I think, it's one of those two, or you're seeing a lot of what you see is right around that 1 year mark. You see private token sales, OTC trades. And so the buyers of those, it's maybe no tokens hit the market right away, the order books, but through derivatives, they will. The buyer of that on the end trade is a market making, a delta neutral firm who's just shorting the token and looking to capture an arbitrage on that 40 to 50% discount.
Yeah, definitely. So when we're talking about sort of retention of users or retention of participants in a network, obviously ApeCoin had a very famous airdrop that a lot of people made a lot of money on. When you're looking at the token structure for ZK Verify, what are you going to do differently this time to make sure that the token doesn't tank this time? No offense.
By the way, yeah.
No
I mean, a lot to say about that tanking, but first of all, we're not a token factory. I just put that out there. We've only launched a few in like 10 years. But so, I mean, for us, so the amount that we sold to VCs was extremely small to begin with, and just enough, literally. I mean, my company incubated the project, and then we raised just enough to get it to the point where we can do exchange listings and stuff like that. So it was literally raised for a very specific purpose, not to actually have like a large amount of liquidity or capital in the company. Because we want to launch and actually get product market fit and see what happens there. I think one thing with us, which is we typically don't sell. So it's kind of one of these things where, like, when you look at the people that are selling, like in the bad case scenario, you've got founders that are dumping and trying to exit, right? Clearly, that's absolutely horrible. And like those are not, in my opinion, very high quality projects. And then you've got kind of a variety of maybe types of investors that are probably doing the same thing. So I mean, what we're doing with ZK Verify this time is we're just being very like PMF focused. Like this is a modular chain for a specific purpose. It's like, like Celestia for DA, this is that for ZK, right? And verification. So for us, it's actually, focus on the BD pipeline, and we've got, some decent traction there in the pipeline of actual usage. And we're going to keep growing that, and we're just going to grow that massively, and then just kind of input a mechanism so that revenues into the network actually convert into value to the token. You go from there.
Yeah, I think this drive toward fundamentals is like something that across the board we can probably universally agree is something that hopefully we've hoped for the last like 8-9 years that fundamentals would win out. Alpen, do you think we're really at a tipping point here? Do you think we're at a point where fundamentals are winning, or are we still? I was on a panel a couple months ago where we were discussing whether we think speculation is product market fit, which was fascinating. Don't get me wrong, but Alpen, do you think we're at a tipping point for fundamentals versus speculation, or how much do you find portfolio companies have to play to speculators?
Yeah, so I think that the tooling and what we can see about on-chain revenue has improved. So we can see a lot more. There's a lot more companies like Artemis and others that are putting out data, the TIE and others that are putting out information that people can actually look for themselves to understand.
Like dashboards and like all that other kind of active stuff.
And just understanding what the protocols are actually earning. And I think that, obviously there are projects like Hype, there are DEXs in different ecosystems where you can actually see that, there's a correlation between the way people view the token and the business of the underlying business that they have, the velocity of those companies, the market share change and the growth over time. And so I think that doesn't necessarily apply to every single type of project, but I think that's an important factor for thinking about, different types of tokens. There are tokens that have a kind of more of a speculative aspect to them. And so, you have to evaluate them accordingly. But then there's some that are basically like DEXs and like perp DEXs and others where you can see what's going on. And it's like, it makes a lot of sense to then look at, well, on that basis, I think this token is better than another token. And I see that they have a certain trajectory and to allocate accordingly. I think, as I mentioned before, I think issuing a token, especially nowadays, entails so much. Because you're one token in a sea of like millions of other tokens. So just getting the name out there, and then all the work you have to do as far as like exchange listings, all the fees that you have to pay accordingly, working with market makers, etc., just involves such a large overhead that and you have this pressure from different parties that have different interests on what to do with that token, that you have to have quite a hefty part of the bandwidth of the team. So that just comes down to like, what is the point of this company, right? So if you are a meme coin, then that's going to be a huge part of what you have to deal with. But if you're doing something else, it's important that you have, like if you're a perp dex, et cetera, then you have that part of the business so clearly like fine-tuned that when people look at it, they can see the relationship between that and then why the token will accrue value. And I think that that's exactly how we view it. I mean, it's either that or it's actually the network growth. So you actually see the growth of networks, whether they're blockchain, for example, layer ones, they may or may not be seeing a significant, month over month growth in their revenue every single month. But we do see that there's growth overall in the ecosystems so I think that you can use different metrics, but I think fundamentals are key, especially for VC investors. On the liquid side, you're going to have to allocate like proportionately, like for the ones where there's more of a speculative aspect to it, and what if you're trading more on a short-term basis. But I think what's unique about digital assets and crypto is that you see there's a lot more on chain.
Yeah.
Right. So it makes sense to use that to your advantage when you're selecting for things. Yeah.
Yeah. So how much, and I'll toss this to Max, when you're thinking about like information that you can receive from places like the TIE or Masari or Blockworks puts out lots of like interesting reports. And then you combine that with your Dune dashboards, with Arnabis, with all these different tools that you would use. Obviously, I'm sure our friends in the audience use all kinds of tools to assess what kinds of tokens to invest in. When you're thinking about your relationship with the companies that you're investing in, how much of the information you're receiving about tokens comes from these third-party data companies or from live dashboards? Like how much of it is on-chain data versus relationship-based with the companies that you're working with? Like how much time do you spend with teams comparatively to sort of third-party separate information?
Yeah, I think it's a lame answer, but the answer is a little bit of both. I think every liquid token, well, really every project, whether you have a token or not, you should have some dashboard of KPIs of, these are the important metrics that we think as a team are going to drive our business, our project, and eventually accrue value. It might not be, fee earnings today, but if we get users, that turns into more developers and gets that flywheel going, and then we can turn on a fee switch when we have sufficient market share, and so forth and so forth. So I think it's we decide what we think are the KPIs for any given sector down to the project, and then we may talk to the team to say, hey, are we understanding this right? Like, are these the right KPIs? And they might, yeah, that's not how we're thinking about it, but we think this metric's important. So I think it's definitely important to get their sense of like we are hyper focused on this metric, whether it's a new product or TVL in a certain type of pool, or we're deploying on a new chain. So we're putting our efforts towards there. And I think it's helpful in understanding, so many of these projects use the token as an incentive. So I think it's important to hold them accountable. Like, hey, the growth's not there. Why don't we turn the token incentives off there and redeploy them back to this? So I think it's helpful to just, understand from them what the driver of the project is, and two, accountability.
Yeah. So I want to tap on something that you said about incentives. So obviously we've seen with lots of different projects where, as soon as you turn the incentives off, you don't know how much of the project is going to stay. Rob, what do you think about kind of retention of users, and how, I guess it comes back to, are we, the HL question is like, do we think, is it airdrops? Is it grants from the foundation? Is it like, how do you think about community growth from an incentives perspective? And are airdrops still serving their intended purpose?
I mean, I'm not a huge fan of airdrops. I will say that. not a huge fan. Community members may not like hearing me say that. But it's
sorry guys, no free money.
Sorry, because we're planning for a ZKV airdrop. But so I've seen some examples where absolutely horrendous, where, I'm not going to name the DAO, but like we're kind of commissioned to launch a staking platform for a DAO. It was literally just a giveaway to, like short-term incentives. Like, guys, like you got to really tie these incentives to actually getting something productive out of them, beyond just kind of people coming in, gobbling them up and leaving. On the other hand, though, like I do view them as legitimate user acquisition costs, right? It's kind of an expense for user acquisition, but then how are you going to retain those users? So you really have to do that in a way where you're getting them to come love your product at the end of the day. And maybe they came in the door from that perspective, but then they need to stay there. So ultimately, that's how we look at it.
Alpen, when you're speaking to portfolio companies, I know you talked a little bit about kind of the listings game and how expensive it is to launch a token and all the rest of it. Is the Binance tax worth it?
Yeah, I mean, I think that's, changes over time, right? I think that we are, it depends, right? And I think that right now it may not be worth it for a lot of companies. I think the biggest problem you have with these things is that you're paying a large amount, and then you're dealing with the fact that, the outcomes are not that great, right? You can look at the outcomes, and it could be even net detrimental in some cases. It comes down to like the timing question, right? Because Binance is an incredible platform, and so but in and of itself, having that, check mark to say, oh, I have a Binance listing, in and of itself is not really the best way to leverage that at this point. I think there's, but again, if you need to manage the other aspects of the business, right? So if that ends up being like the most definitive part of it, that's not gonna be it. Especially we've seen that now to date. Honestly, I think that if you have a VC perspective, you're necessarily thinking more longer term. You have to be. If you come in at a later valuation, right, then you have more pressure on trying to capture the value at the earliest moment, because you're seeing that, oh, well, there's not that much time left. I think that's when, that's where we see these like kind of different incentives, different kind of or like misalignment around timelines. From a VC perspective, again, tokens are reaching a point where they're becoming more mature as an instrument for governance, for value accrual, for coordination, for incentives, and we're beginning to start to see people do it in the right way for certain types of projects. You see that playing out, I think, in the space. So when we talk to companies, we really do try to understand for this particular team, for what they're trying to accomplish, where does this actually add like significantly to their overall roadmap? And if it really doesn't, then we're going to try to, advise them to wait because it's not really beneficial, precisely because the gold standard, which used to be being listed on top of these largest exchanges, is proving to be detrimental to some of these companies, just because just the outlay of money that you have to put out, right?
Yeah.
So, and then at the end of the day, there are all these tokens. I mean, look, I think it makes sense to have a token for a lot of companies who are in the Web3 space. There's some net benefit there. The point is that when it gets listed, you need to give it time for price discovery, and and then you do your best to make sure that people can see why that token should accrue value, and you've done the right mechanisms. You're putting forward the right mechanisms to push the value to the token, right?
Yeah, I think one thing I'd say on that is, look, Binance wants to make money, and they will list projects that people are trading and investing in. So if your project's good enough, you will not have to pay that tax. A perfect example, it's obviously a very popular project, but look at Hyperliquid. They didn't pay that tax. Binance listed that because they knew people wanted to trade it. So if your project's good enough, you shouldn't have to pay that. If you want to sell to a lot of retail speculators, and that's your end goal, then it's probably worth it.
I mean, Hyperliquid it's a good example. It's also a hard example, right? Because they kind of bootstrapped, the team bootstrapped the capital that was required to actually launch such a great product. And then, obviously so it stands out. It's just that when you look at the rest of the projects that have done like quote unquote fair launches, not all of them have done as well. They don't have enough money to like necessarily run their business. But yeah, that's a great example, right? That you can make an asset so attractive that exchanges will ask to have it listed, which is ideal, right?
Yeah, I don't think that wasn't a comment on fair launches. That was a comment on whether your token, whatever it is. Yeah, like, really, you probably need to go to some venue to help launch that, but you could launch on DEXs, and if there's enough activity, people will flock to it.
Yeah, totally. So just in the interest of time, I think we are out of time or close to out of time. So I want to ask each of our panelists individually, just because this panel is called How to Fix TGEs. So do you have a hot take on if there is one thing that a builder or someone who's thinking of launching a token or setting up a token, what is one thing that a builder can do to fix their TGE, to make it so that their token will be successful for the purposes that they're trying to? And it depends is not an acceptable answer.
I guess I'll kick it off. Guys, I mean, I'm going to be a broken record here to say, product market fit. Really, I think focusing on your product matters the most. And from the perspective of TG, I also agree. Like Alpen made a point earlier that not every project needs a token immediately. I totally agree with that. Also on this Binance tax thing, I mean, we've been there, done that on multiple projects. Some projects make sense for a day one Binance listing, others it kills them. I mean, so it really is, it depends moment. But for the TG or the issuer or the team behind it, I think like integrity is number one. Make sure that you're communicating clearly and that you and your team have integrity and are setting the rules of the system so that you're not going to rug them clearly, right? And then just focus PMF, guys. Like focus on your product, get out there. And then also just from a tactical perspective, it probably doesn't make sense to have a tier one on day one if you don't have extremely explosive PMF like right away, like leading into that. If you don't, you're probably just paying a tax that's going to crush your project and you're going to list. And there's way too many charts that you just see this big spike up on listing, then a collapse and flatlining, and you're kind of done.
Yeah, like in when we're advising portfolio companies, we try to tell them to make their token launch as much of like a non-event as possible. Like the higher the hype, the bigger the crash. And so the more that you can like see a TGE as a starting line and say like, okay, this is where we've began. This is not it's people are trying to see TGEs like IPOs, and we're not even close to there, because these companies are like little baby companies. You wouldn't tell a 20-person company to go public at 20 people with no fundamentals. Alvin, hot take.
Yeah, I think the down only kind of comment or the title, I think is like relevant, right? So I think people who come in, like who are coming in outside of the private market, right? They come in and they're looking at these tokens and they're out in the wild. You're going to see this like discovery process and this kind of decline process, especially when you kind of like keep ramping up the private valuations, and then you try to get like a premium. I think that for companies and projects that are dependent on growing their, basically growing their network or growing their product via the token, if they really want to broaden that base, they definitely want to make sure that their community participates in the upside closer to kind of a little bit more aligned with some of the early, investors. Obviously, it doesn't have to necessarily be the exact same because they're coming in at a different point in the kind of or like risk from a risk perspective. But I mean, having a huge differential will be reflected, once they launch, right?
Yeah.
You may not see it like immediately, depending on where you are in the market cycle, but you will eventually see that. So I think that you should like be thoughtful about what valuation you actually list the token.
Awesome. Take us home, Max.
Yeah, I would say one thing that hasn't been said is like disclosures. I think that's like a big thing of the FIT21 bill, the market structure bill, but disclosures around, the insiders, what they own and what they're doing with the token, and especially around kind of secondary transactions right around token launch. Like I think one thing you often see is like an OTC round right as the token launches. And the way we think about that, whatever price that was struck at, that deal, that is the token launch price because that's the real valuation. So I think, more disclosures around that, around market making deals, stuff like that, just transparency.
Yeah, and so just a quick comment on that is that like people are finding out, right? I think that the issue is that sometimes teams they do these things and then they have like these agreements, contracts done like privately, but people, on crypto Twitter and in general are finding out about what's going on, and so it's reflected overall on the price. So I totally agree with that point. I think disclosures are critical, and I, in that sense, welcome like more and more scrutiny on the way tokens are listed. And I think the takeaway though is that we are at a very different point in time from a regulatory perspective on how tokens are going to be treated. I think they're going to be treated more seriously. So I think that the teams need to take it more seriously when they actually decide to launch token, because it's going to mean more, I think, in the future. So if you do it well, it will pay off.
Yeah, definitely. I think that is a great point to wrap us up on. So thank you so much, gentlemen. And thank you to the tie. And that's it for us.